have heard about the recent merger announcement of IDFC Ltd and IDFC First Bank, and they have shared about their swap ratios like 4 days ago. The swap ratio announced is 100:155. So for every 100 shares an investor holds in IDFC Ltd, he'll be getting 155 shares in IDFC First Bank. That's what the swap ratio means. So in this video we are going to see about what a swap ratio is and what it means to an investor. So before knowing what a swap ratio is, you need to understand what a merger is. So when I say a merger is happening, it means that 2 to 3 entities come together, amalgamate, and a new entity is born out of it. So all the 3 entities cease to exist and a new entity is born. And when I say one company acquires another company, it simply means that one company takes over another target company. So there the target company ceases to exist and the acquiring company will survive. That's what a merger or an acquisition means. So when we speak about mergers and acquisitions, a merger or an acquisition can be paid through various sorts of payments like cash or stocks or partially cash and stocks, or it could also be a swap ratio or an exchange payment where there is no payment in cash but there is only a conversion of stocks from one company to another. A swap ratio is designed so that technically investors of both the companies are actually benefited. So generally a merger should be a synergy creating event for both the parties. So arriving at a swap ratio is not a very easy task. They use a lot of quantitative metrics like a company's EPS or a dividend yield or future prospects of the company, and lots of financial parameters are used, and not just the quantitative metrics. To arrive at a swap ratio, you also need to use the qualitative metrics, and a swap ratio is very important to the company itself because a swap ratio will tell who is going to hold the major controlling shares of the company. So in this IDFC merger, if you see, IDFC Bank is going to get 155 shares of IDFC First Bank for every 100 share that its investor holds, which means the swap ratio is in favor of IDFC Bank. And so when I say a swap ratio is in favor of IDFC Bank, it means that IDFC Bank shares are valued more compared to IDFC First Bank shares. That's what the swap ratio tells us here. So as such, a swap ratio here will decide who is holding the controlling authority. So here, as the swap ratio is favorable to IDFC Ltd, the majority of the controlling shares of IDFC First Bank Ltd will be going over to IDFC Ltd. That's what the swap ratio tells us. From an investor perspective, what should you know about the swap ratio? So right after the announcement of the swap ratio or the exchange ratio, shares of IDFC Ltd started rallying up, and it reached almost a 52-week high right after the announcement, and shares of IDFC First Bank fell. The reason? Because the swap ratio is in favor of IDFC Bank, not in favor of IDFC First Bank. From an investor's perspective, the reason why investors start to buy IDFC Ltd share after the announcement of swap ratio is to take advantage of the arbitrage opportunity. And now what do I mean by arbitrage opportunity? Arbitrage is the process of buying a stock at a place where it's sold at a lower price and sell it at a place where it's sold at a higher price. Now where does arbitrage opportunity come here? So now if you look at the swap ratio, for every 100 shares that I hold in IDFC, I'm going to get 155 shares of IDFC First Bank. So it simply means that, say for example, so I'm holding 100 shares of IDFC Ltd, and for example say IDFC Ltd shares, one share's value is 100 rupees. So I'm holding shares worth of rupees 10,000 rupees, and for the 10,000 rupees worth shares that I'm holding, I'm going to be getting 155 shares of IDFC First Bank. Let's say IDFC First Bank is trading at rupees 80 now. So it simply means that I'll be getting shares worth of 12,400 rupees. That is 155 into 80. So here my arbitrage opportunity exists. That's why investors are rallying up to buy IDFC Ltd shares so that they can make use of the arbitrage opportunity and profit from it. Now, when I am buying shares to take advantage of the arbitrage opportunity that exists during this merger, there are two things as an investor that I have to notice. So one is, even though the swap ratio is announced recently, deal is not going to be taking place anytime soon. So there is a minimum time period. It will take up to at least 12 months or a maximum of 18 months for the merger deal to be complete, only after which the deal will come into effect. So, even though you are rallying up buying shares of IDFC Limited now, you are going to be waiting for a long period, long horizon of 12 to 18 months for the deal to be complete, which is quite a long time period for an investor. A lot of uncertain factors could come into play. So that is one point that an investor has to note if he is buying the shares for the arbitrage opportunity. The second point is, even though the swap ratio is fixed now, during the process of completion of the deal, as per RBI's request, the swap ratio could be changed. So that is the second point that an investor has to note. And from the perspective of the investor, even though IDFC Limited could be an attractive investment opportunity now, if at all you look at the financials, there are three companies that are amalgamating. IDFC Limited is a parent company, IDFC Holding Company, and IDFC First Bank. So I'm not going to get into the details of the three companies, but IDFC Holding Company will first get merged with IDFC Limited. That's how the merger is going to take place. So the holding company doesn't have any major business now. It has sold its AMCs. So the only major business the IDFC Holding Company has now is IDFC First Bank. And from the business perspective, if you see, IDFC First Bank has had a lot of bumps in the past years, but for the past 1 or 2 years, it's been quite stable. So the CASA ratio of IDFC First Bank, CASA is current account and savings account deposit of IDFC First Bank, is over 49% now, which is a very good indicator for the bank that the bank is quite stable. The NPA, non-performing assets of IDFC First Bank, has reduced from 2.5% or so to 0.8% now, which is again a very good indicator that the bank has become quite stable now. So with all these indicators showing a very good positive sign for IDFC First Bank, IDFC First Bank is a very good opportunity for a profitable long-term investment. So it's one of the very good stocks under rupees 100 to invest for the long term. Considering the financials, if you see, IDFC Limited is going to have a major holding in IDFC First Bank through IDFC Holding Company, more than 39%. So based on the financials, it is safe to tell that IDFC First Bank, if it utilizes the economic growth properly and mitigates risk properly, is a good investment, long-term investment perspective. So I hope that you've understood what a swap ratio is, how an arbitrage opportunity exists in the swap ratio, and what are the things to note when you're buying stocks for arbitrage opportunity. And also a few points about the three amalgamating companies. So thank you so much for watching. Do like and subscribe.